Okay, so today we're going to be going over what is a change in state of delivery and how to effectively use it within your plan, however, whatever your strategy is. So, first of all, what is a change in state of delivery? Now, a change in state of delivery can be made up of two or more candles. It can never be one candle, it has to be two or more. It can be as many candles as you want, but it cannot be one. So, a change in state of delivery is when you have two or more candles like this here, and then on the body of the candle it will get closed below, and that is called a change in state of delivery. Now, the most effective way to use this is in a turtle soup model, so you're going to have SMT and buy side liquidity or sell side liquidity. A change in state of delivery is never placed from a candle wick, it is always based off of the candle bodies. As you can see here, change in state of delivery is placed at the body of the candle. So it does have to be closed through to be counted as a change in state of delivery. It cannot just be like this candle here. This would not count as a change in state of delivery. It has to be this candle here once it is closed below that candle. Now, it's quite hard to find change in state of deliveries if you're just looking at a chart. It's probably not going to be very high probability, but if you're using it within your model, especially if you're using turtle soup, which I recommend, then it's going to be the best because it's like a pre-break of structure. It's going to give you a better entry. So the way these work is they'll usually be retraced back into like a fair value gap. Now, the best change in state deliveries are created within a fair value gap here, so we can see it ran down, created an imbalance here, closed that, made the change in state delivery, and then this candle has came up, rebalanced the change in state of delivery, and rebalanced this. So this would be your entry to go short because you have the buy side liquidity there, and an SMT. So this is what the model would look like if you was to place a trade. Okay, I'm gonna go over some live chart models now of real candlesticks so you can see. So here on the 4 hour, this isn't involved with SMT or liquidity level, but this is just what a change in state of delivery looks like. So we have three candles here running up, and then so what we do is at the body of this candle we mark it out, and that is going to be our change in state of delivery. Now, as we can see, price came back in, rebalanced this change in state of delivery, rebalanced this imbalance here, and then went lower. So this is what you're going to be looking for all of your change in state deliveries. You want to see a rebalance into the change in state. Now, this can be bullish or bearish, so I'll give you a bullish version here. So we have two candles here at the body of the candle. That is our change in state. Now, as we can see, once we create this change of state, we also created an imbalance, which is what we want to see. We then come back down, fill the change in state delivery, fill this imbalance, come higher. Now, the reason why change in state deliveries is important because it's not just a line. When a change in state delivery is created, that is an order block there, okay? So that is why more of the time price will come back to fill it. So I'll show you some more models here. If we go to like a lower time frame, like a 3 minute, we can see here. So this was a trade that I was looking at. So we swept this high here. Okay, then we had on the 1 minute, if we can find it. Then on the 1 minute here, so after we create that sweep, we then get a change in state. So remember, it has to be two or more candles. It can be as many candles as you want. So here's a answer model thing with 4 candles. So here we had sell side taken. Okay, I'm pretty sure there's an SMT there as well. And then at the body of that candle, that's your change in state. Obviously, it's not a winning move there, but that is all a change in state of delivery is, guys. It's a formation of two or more candles, and it's basically like your pre-break of structure. So another one here. Look at that change in state. So again, the best place to use these is when you're using SMT and you're using liquidity levels. It just helps a lot. It's gonna be a great confluence for you to use if you're scared of entry and you just want high probability setups. Definitely recommend it. So look, like here. So this would be bearish. Okay. Look. Formation, 4 candles. We then get change in state of delivery there. Price then comes back up. Fill this order block that is the change in state of delivery. Fill it, come back down, boom. That's your model. Okay, now if you're getting confused with the bullish and the bearish change in states, it's really easy. So if you've got bearish candles, like we have here, so there's four candles here. So if they're bearish and you create an SMT from a bearish candle, that change in state of delivery will be bullish. Okay, so the price is going to want to come fill this once you create the change in state of delivery, like you did here, ran back down, came back to whatever, and then went up. Or a bearish change in state of delivery is used from bullish candles. So you have a formation of bullish candles like this, implement it with your liquidity and your SMT, and then your bullish candles create the bearish change in state of delivery. So it's literally just using the opposites. Now the higher probability models of this will create a change in state of delivery and an imbalance at the same time. Okay, so look at this, right? If we go down to a low time frame, like the 3 minute, just got to find out where I am here. Okay, let's use this for an example, right? Right, so what we have here is we have formation, 4 bullish candles, so then that's going to be our bearish SMT, just like that. Sorry, bearish change in state, not an SMT. Okay, and then what do? We created an imbalance here, but another important part is using inverse value gaps as well. If it creates an imbalance or an inverse value gap with a change in state of delivery, it's probably high probability, and then you literally just do your entry. Once it retaps into that confluence, rebalancing that change in state, put your stops above the confluence if you're like very confident, or put the stops above the high, depending on how confident you are in the trade. I don't really think there's much that I can add for this, so if you did find it helpful, let me know. If you thought that I could have said more, or you need help on certain things, let me know in the comments. Let me see what you want to see. And yeah, thank you for watching. See you in the next one. Let me know if you want any more tutorials.